Hello everyone, welcome to Success Mantra by Fintech Consultancy. Your growth is our business, so we are back with our new video on difference between old tax regime and new tax regime. So let's start the video.
Taxes. Oof, right? But what if I told you that choosing the right regime could actually help you to save money? So which one is better for you? Let's break it down and help you to make the smart choice. Now, if you are earning in India, you will probably heard about these two options. But what do they actually mean? We have two different tax regimes to choose, the old regime and the new regime. Each comes with its own rules, rates and benefits. One gives you deduction or exemptions and other offers lower tax rates and a simpler processes. So big question is, which one helps you to save more money? Alright, now let's look at the common differences in slab rate between the old and new tax regime. This is where things get interesting. Under both regime, income up to 2.5 lakhs is tax free, so no worries there. But after that, rate starts to change. In old regime, it jumps pretty quickly. 2.5 lakhs to 5 lakhs is 5%, 5 lakhs to 10 lakhs is 20%, above rupees 10 lakhs is 30%, so it's a steep climb. Now, in new regime, the increase is more gradual. 2.5 lakhs to 5 lakhs is 5%, 5 lakhs to 7.5 lakhs is 10%, 7.5 to 10 lakhs is 15%, 10 lakhs to 12.5 lakhs is 20%, 12.5 lakhs to 15 lakhs is 25%, and above 15 lakhs is 30%. So basically, the new tax regime spreads out the tax rates more evenly, which can benefit people with middle class range, but only if you do not claim deductions. Alright, now let's talk about one of the biggest declining factor, that is deduction and exemptions. This is where the old and new tax regime really start to show their differences. Let's break it down. Under old regime, you get access to whole bunch of deductions. For example, section 80C. This includes things like LIC premium, PPF, ELSS and investment. All this helps to reduce your taxable income. But in new regime, these are not allowed. Same goes with section 80D, which covers health insurance premium. Old regime it is allowed, but in new regime it is not allowed. What about HRA and LTA, those travels and rent benefits? Again, allowed in old regime and not allowed in new regime. Next one is standard deduction of rupees 50,000 is allowed in both regime, so that's a win either way. And finally, section 80 CCD. This is the employer contribution to your pension fund, allowed in both regime, which is great if your company offers it. So, to sum it up, if you are someone who makes use of these deductions, the old regime gives you more room to save. But if you are not claiming much, the new regime might still work better for you and its lower tax rates. Alright, let's wrap up with a quick summary. New tax regime could comes with a lower tax rate. It sounds great. You don't have to worry about tracking exemptions or a deduction. So it's a super simple. It's ideal for people earning below 7 lakhs rupees. For those who don't have many deductions to claim. Plus, filing process is faster and less complicated. Old regime gives you access to wide range of deductions like ATC, ATD, HRA, home loan, interest and more on. So better to suit it for people who have significant influence, investment or expenses. And if you're using those deductions smartly, it can actually result in lower tax liability.
For more quizzes and assignments, you can reach out to us on below. And that's a wrap on complete video on difference between old tax regime and new tax regime. Stay compliant and don't forget to like, share and subscribe. Success Mantra by Fintech Consultancy. Thank you.